from investone.com, and I'm going today to explain to you how to use Fibonacci to trade any financial market. So a quick knowledge about Fibonacci. So Fibonacci found his theory using by an observation of rabbit production. So this is a pair of rabbits produced. This is another pair of rabbits. So this pair of rabbits produce two pairs of rabbits, and those two pairs of rabbits produce three pairs of rabbits, and those three pairs of rabbits produce five other pair of rabbits. So he found that a sequence of numbers emerged. So 1 1 2 3 5, and if you observe it, so 2 equal 1 plus 1, and 3 equal 2 plus 1, and 5 equal 3 plus 2. So what he found that if you calculate the ratios, so if you calculate this is if you divide, this is number and the number before, 1 divided by 1, and 2 divided by 3, and 3 divided by 2, and 5 divided by 3. So you are going to have three ratios, and then you will have the same ratio that repeated. It's the golden number that Fibonacci found. So that Fibonacci found. Okay. So this is how Fibonacci found the Fibonacci ratios. So I'm going to use them to trade the forex market, and you can use them to trade sugar or any commodity. So feel free to use the theory on any market you choose. So for example, if we want to draw a Fibonacci retracement, because there is three types of Fibonacci. There is retracements, extensions, and projections. So the retracements, we can draw them like that, okay, from the lowest low to the highest high, and we're gonna find different Fibonacci retracements. So here is the 23.6% Fibonacci, the 15%. The 15% isn't a Fibonacci retracement, but it's a logical one. So you could use it also to trade the forex market, because it's a very profitable level, despite the fact that it is not a Fibonacci level. So you must use it as well. So this is if you are in an uptrend, and if you want to use the Fibonacci for a downtrend, you just go like that, drag and drop from the highest high to the lowest low, and then you will find the Fibonacci retracements. So the Fibonacci retracements are just to the 100%. Here is the Fibonacci extensions, 127 and 161.8%. Those are the projections, and the Fibonacci is quite simple. You can use it quite simple, but here I'm going to explain to you the 15% rule, that it is very important to know. So we have here A, B, C, D, O pattern. So if we have an impulsive move that goes up, and a correction, then another impulsive move, and a correction that make a rebound in the 15% area, so the price will go into continue its direction to the top. So remember that, and I have found a lot of this pattern. Really, I have found a lot of this pattern by trading. For example, here, if you observe it here, there is an impulsive move, then a correction, then another impulsive move, then a correction of 15%. I think that it is a 15%. is, yes, it's a 15%, then the price goes up to target a Fibonacci extension of 161.8%. So this is a very important pattern. So we have an impulsive move here, then we have a correction, an impulsive move, then a correction, then another impulsive move, then a correction of 15% of that trend. So of that trend, 15% of that. So the price goes up and make an impulsive move targeting the next Fibonacci extensions that you can find just by, okay, we're gonna make it. So so second thing is here. So we're gonna target the next Fibonacci extensions to target our profit here from the sugar. Okay, this is the 15% rule, and then as I said, drag and drop from the low to the top and drag and drop from the high to the top. It's quite simple. So the Fibonacci rules are very simple. So here, for example, we want to predict the price here. We are here and we want to predict the price. So the Fibonacci tell us that if the price, so the 23%, the 38%, the 61%, and also the 15% are all support and resistance lines. So the price will reverse. There is a high probability that the price will reverse its direction if it is near than any one of those Fibonacci levels. For example, here the price reverse its direction from the 50% line, but the very strong level, it's the 61.8%. And if the price goes down and touch this is level, the 61.8%, it going to reverse its direction. There is a high probability that the trend will continue its direction to the major market trend. And if the 61.8 is breached by the price, we start looking for a trend reversal. So this is very simple. The Fibonacci uses is very simple, but the extensions, as I said to you, that for example, if you put the Fibonacci like that, the price goes up, and if it breaches the 61.8% Fibonacci level, there is a high probability that the price will continue or will reverse its direction from a downtrend to an uptrend. So we start looking for the first Fibonacci extension, it's the 127%, and the second Fibonacci extension, it's the 161.8%. So really the Fibonacci is very simple, but I want to show you something amazing. It's to combine different Fibonacci levels to get more, to make the Fibonacci more profitable, because Fibonacci isn't a perfect method to trade the market, so it's not going to be right all the time. So you should use multiple Fibonacci retracements to get the things done. For example, here I'll make an up Fibonacci, then a down Fibonacci, and we start looking for any multiple conflictions, so multiple combinations. For example, here, So we're gonna do that, then we're gonna do another. It's quit trouble, so I'm gonna make it more special. Okay, like that. Okay, the 15% here is multiplied for 2 times, so we use the Fibonacci level, we use the Fibonacci here, and we use it here also, so we use it twice times to make the Fibonacci more better to predict the market. So if you notice it here, the price goes down and goes up and goes down and goes up until it breaches the 15%. So calculate how much the price is reversed here by the 15%. Why? Because this is 15% is conflicted by the Fibonacci levels for 2 times. So here we have an uptrend, and here we have the same uptrend but with 2 Fibonacci levels. And this is the best way to trade using Fibonacci. Just combine 2 Fibonacci levels or more and search for conflictions. So this is all about Fibonacci. So for example here, if you look here, so there is an up Fibonacci, and when the price breaches the 61.8% Fibonacci level, it starts to target the first extension, then it target the next extension. It's very simple. And here, for example, we have a downtrend, then a reversal trend that breaches the 61.8% level, then continue its direction to target the first extension 127%, then the final extension 161.8% level. So this is all about Fibonacci, and I hope you benefit from that. And this is my blog mvstone.com. You can find a Fibonacci, the Fibonacci trading step by step. Here I explain all the things you need about Fibonacci trading. So thank you and see you soon.